On the last trading session of Friday, gold spot printed a closing price little above $1,792 per ounce. Numbers rounded and the market is closed. And on the last week, gold traded as low as $1,778 per ounce and as high as $1,849 per ounce. Numbers are rounded and the market is closed. Now, after the sell-off, gold is back below the 20 days and the 50 days daily simple moving averages. We are almost trading around the 100 days and 200 days daily simple moving averages. The RSI readings are bearish on the daily chart and still moderate on the weekly and monthly chart, and the supports are seen at 1766, then 1732, then 1680, and the resistance levels at 1800, then 1833, then 1850. The pivot on the weekly chart is about 1806 and daily chart 1795. As long as we are trading below these figures, you can place a sell at the beginning of the week at these levels. That's all for numbers. We'll move on now to the economic calendar. On the economic calendar for the coming week from the United States, we are waiting for pending home sales on Monday, then CP consumer confidence and Fed Powell testimony on Tuesday, and services PMI factory orders to be released on Friday. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our Gold Price Weekly Forecast Gold Today. If you're new for this video, just let me guide you how we do things here. We are going to start with the a quick recap of what we talked about on our last video. Then we will look at the chart of the US dollar and the chart of gold, and we will arrive at a conclusion. On the last week, we have been expecting volatility to come into the gold market and or the overall precious markets, and we said the main thing to look at it was the President Biden decision on who is going to be the Fed chair for the coming period, and we said if Bernard is chosen, we may see a rally in gold. What happened that President Biden had chosen to keep Fed Powell to lead the Fed for another period, which actually started the sell-off in gold and the rest of the precious metals. Now, moving on to the US dollar chart, the US dollar chart is still looking strong, especially in comparison of the other things that is priced against the US dollar. And we do expect that the US dollar is still going to move higher with a target, let's say immediate target of 97.5 to 98 before taking any major correction. However, also the charts of like let's say other main currencies like the pound and the euro still is pointing for more to the downside, let's say a little more to the downside before we are reaching into like some sort of a solid floor. So we are still, let's say, neutral in the US dollar. I think any sell-off in the US dollar is going to be a good buy on dip for the US dollar itself. Now moving into gold, as I said in my last video, we said that gold, since it's closed below 1860, which is a breakout level on the weekly chart for the, I talked about the pattern. I said we have some sort of a bull flag, prolonged bull flag on the weekly chart, and we do expect that if gold closes above 1870 to continue to the upside, and if it closes below 1860 to go back and to retest the neckline of the inverse head and shoulder located at 1820. Now gold sold off and went below the neckline of the inverse head and shoulder, which means technically that this pattern that started the rally to the upside is invalidated. And usually when this happens in a market, you have to expect that the market is going to go all the way down to test the bottom of the pattern itself. I mean, we are going to test the inverse head that we have had for the inverse head and shoulder pattern, which started the rally, as I said. So going into the next week, I'm going to have a bearish, let's say, a bias against gold and the rest of the precious metals, especially silver. I expect we are going to retest the 21.5 on silver, and we are going to retest 1730 or maybe a little below on gold. But however, there is a risk factor is happening at the moment in the market, which is the new COVID variant, the Omicron variant. This could, let's say, initiate some sort of safe haven buying from time to time. But I see these rallies are worth selling than buying. The point is that gold below 1833 is bearish, and as I said, as long as we have invalidated the inverse head and shoulder, most likely that the market is going to head lower in the coming days and weeks. So to summarize, we have this situation at the moment, okay, that technically gold and the rest of the precious metals are looking to more to the downside, but we have a risk factor. Risk factor, this means gold only usually respond to any risk factor in the market. Don't expect silver or platinum to respond to risk factors. So we do expect to see some sort of volatility, but we are having a bias toward the downside of the target 1766, then 1730. That's all for our video for this week. Thank you guys for watching. Please visit www.goldcoachy.com. You will find products and services that might suit you or help you into trading this market and other markets. And we will see you hopefully in the coming week in another video.